There's a truth that we, those of us pouring everything into building our careers, need to be honest about. The financial markets will crash. This isn't fear-mongering, it's a rule of the game. The question isn't if, but when. And the most important question isn't, how do I avoid it? Because you can't. The real question is, what will you do when it happens? Picture this. You've been working relentlessly for years. Your career is on the rise. Your financial security is tied to an investment portfolio you've carefully built. Then, one morning, you check your phone. Everything's red. Headlines scream words like collapse, panic, sell-off. The number on your screen, the one that represents your blood, sweat, and tears, is evaporating by the minute. It feels like a punch to the chest. And a voice inside your head yells, "Do something! Sell before it's all gone!" In those chaotic moments, the more you try to do something, the faster you head toward disaster. Today, I want to introduce you to one of the most important skills in long-term investing. It's called strategic inaction. It sounds passive, but it's actually the key to not only surviving market crashes, but coming out stronger on the other side. Let's explore why doing nothing might be the smartest move you can make. The legendary Jack Bogle, founder of Vanguard, once said something unforgettable. Don't just do something, stand there. It goes against every human instinct. When we face danger, our brains are wired to fight or flee. In the financial world, fleeing means panic selling. It's an emotional reaction, and the market has zero mercy for emotion. So, how do you stand still strategically when it feels like the world is collapsing? The answer? You build a strong financial fortress beforehand, a system that gives you the luxury of doing absolutely nothing when chaos hits. First, recognize that your real enemy isn't the S&P 500 crashing. The real enemy lies between your ears. Our brains are terrible at making decisions under pressure, especially when fear takes over. Science shows that the pain of losing money is twice as powerful as the joy of gaining it. That fear drives us to act, and often, to act wrongly. Here's the truth about trying to dodge a crash. You don't just need to be right once, you need to be right twice. First, you have to sell at exactly the right time, right before the peak. Second, and this is nearly impossible, you have to know precisely when to buy back in at the bottom. Most people wait for good news, but by the time good news hits the headlines, the market has already rebounded. In fact, the biggest recovery days usually come right after the worst crashes. Miss just a handful of those days, and your long-term returns get wrecked. You don't need luck, you need to be a prophet. And the truth is, no one can do that consistently. So, how do you build that financial fortress? How do we practice strategic inaction? It's built on 3 key pillars. Pillar 1. A clear financial plan. This is your map through the storm. It's not just a spreadsheet with a few numbers, it's the answer to fundamental questions. What is your ultimate financial goal? Where will your income come from once you stop working? Ask yourself what-if scenarios. What if the market drops 30% in the first year of retirement? Do you have enough cash reserves to live for 1, 2, or even 3 years without selling a single stock at a loss? Once you've answered those questions, a market crash is no longer a surprise disaster. It becomes a scenario you've prepared for. That clarity gives you strength, and that strength gives you calm. Pillar 2. Smart diversification. You've heard this advice 1,000 times. But diversification doesn't mean owning 10 different tech stocks. That's just concentrated risk. True diversification means owning assets that don't move in the same direction. When stocks go down, bonds might hold steady. When both struggle, other assets might provide shelter. Your portfolio should include a mix: stocks, bonds, maybe a bit of real estate, or other alternatives. The goal of diversification isn't to maximize returns, it's to minimize volatility. It's the shock absorber for your financial vehicle, helping the ride feel less bumpy. Pillar 3, and the most important, long-term mindset and discipline. Successful investing is a marathon, not a sprint. It requires the patience of a farmer. Plant the seeds, tend the field, and wait. There's a now famous anecdote from Fidelity. They discovered that the investors with the best performance were people who had died or had forgotten their account passwords. Why? Because they did nothing. They didn't panic sell. They didn't chase hot trends. They simply gave their investments time to grow, to ride out the inevitable ups and downs. This, by the way, is the true role of a good financial advisor. Their job isn't to predict markets. Their job is to be a behavioral coach, to stop you from blowing up your own plan in a moment of panic. So, what's the ultimate benefit of strategic inaction? The obvious one is financial. By not selling at the bottom, you give your portfolio the chance to recover and grow again. Most damage isn't caused by the crash itself, but by how we respond to it. But the deeper benefit is emotional. It's peace of mind. It's the ability to sleep at night, whether the market is red or green. It's the confidence that you have a plan, that you've prepared for the worst-case scenario, and you'll be okay. It's freedom from constant financial anxiety, and that's real wealth. Let me sum it up. The market will crash, and then it will recover. That cycle has repeated for centuries. The most important thing you can do is build a solid strategy from the start, a clear plan, a diversified portfolio, and a long-term mindset, and then stick to it. When panic sets in, when everyone around you is selling in fear, remember Jack Bogle's words, "Don't just do something, stand there." Stand still, not because you're weak, but because you're prepared. You've built your fortress, and you trust in its strength. That is the power of strategic inaction. If you want to dive deeper into how to build a strong financial plan that gives you confidence through any storm, hit like and subscribe so you won't miss our next videos. Thanks for watching, and I'll see you in the next one.